Welcome to Insights. I'm Eric. I'd like to have a conversation about Bitcoining, another one. I'm called a review, an open review for everyone to discuss. I think the last reviews were closed, but now Bitcoin has made his move. I think it's okay to open up this discussion for all. Try and encourage people to embrace the evolution of the trader or some sort of trading discipline, to find the power of the matrix, to override opinion, which is growing wildly on the internet. People can say and do whatever they want on the internet. I realize that the matrix in itself, it represents some sort of opinion, but what I do know is that the evolution of the trade is completely repeatable from one market to the next, and that's where I separate one individual's opinion versus another individual's. It's the ability to reproduce the experiment. Most people can't do it, and the matrix allows consistency. So, with that said, I want to talk about the uh, Bitcoin setup within the evolution of the trade. We follow the primary trend. It's set within the weekly trend and the daily trend as well, or the tertiary. So primary, secondary, tertiary. The evolution of the trade is most concerned with following the primary trend. It's been up for 8 months, produced 257% return. It is the highest in the matrix. It reset 4 days ago, so what that means is that the three trends now are in agreement. The three trends create the composite trend, which allows you to add positions in and out of the core position, and we call them resets. There's many phases within the evolution of the trade. The nibble, or the initial energy build that flips the trend. There's the flip, or the flip in progress, the flip, which is the second phase. The third phase is alignment and energy, and that's when energy moves the trend in and out. Cycle extensions cause corrections, and you generate resets. A reset was generated 4 days ago, and that's what R plus 4 is noted here in the phase comp. The final phase is primary trend decline. Bitcoin will enter that at some point when the primary trend cycles get extended, whether it's price and time here, price and time on the different time frames. And as you scan across, you can see none of the price and time cycles are extended. And that's why Bitcoin is not vulnerable. That's why, in addition to the bullish energy build that set up the reset 4 days ago, it's the reason why I encouraged a conservative bet, or the computer encouraged a conservative bet or play to chase that reset. Not all resets are viable. Resets that form within large energy builds or bearish energy builds, or what I call opposing energy builds, are dangerous. So we try to avoid those, or the computer would say avoid those. I could have the computer block them and not show them at all, but it's best to think through the process to understand rather than just react blindly. The whole point of this is knowledge and understanding. But I'll shift to the news flow here in a moment. We can see this is the conversation that I was talking about outside the internet, the discussion that's driving Bitcoin. Bloomberg reports that Elon Musk or Tesla's investment in Bitcoin is everyone chasing, whether it be that or the next company would be Apple. You can't let these announcements drive your decision making. That's not trading discipline to emotionally chase something, although people see that. If you pile in based on that news flow item, there is no way you're going to be able to get out. The trading discipline is going to get us out because we're going to follow the cycles. We're going to follow and know when they're extended. We're going to see the energy builds. I'll show you that in further detail in a moment. But chasing headlines, I mean, it's the best is to turn them off. Log off on Twitter, except for your only sources. My source is the computer. I call it the matrix. I have a more complicated version that I produce, but that's what I follow. I also want to talk about, and as we scroll down here, some other concepts. This one suggests that today's rally is going to be similar to 2017. It's possible, but trends are. I see people referring to these trends as fractal. The fractal nature of a trend has to do with an infinite amount of time frames. It's not superimposing one past cycle into the current cycle. That's comparison that has nothing to do with the fractal nature of the trend dynamics. But saying that this current rally, well, it's going to follow a similar cycle. The news flow is different, so it's going to be pushed around by a different setup. It doesn't mean that we're going to follow the exact You can't, I mean, superimposing 2017 over the current price action and then saying, well, that's what we're going to see. I find that dangerous from the standpoint is that then the human mind looks for the exact same outcome, and rather than adapting to the evolution of the trade, you're just looking for what you want to see. Here's another post that talks about like the government's ability to regulate will be government will step in and regulate the death out of Bitcoin, and I mean, I don't really know what they're talking about here. Maybe things like promotion of other assets like gold, but Bitcoin's existence is going to be challenged at some point. It's a form of competition, and if you believe, unless the government changes, that competition is going to go unimpeded without any form of challenge, regulation is not going to stop it. Right? When the time comes, you're going to have an outright attack on its competition. So you have to be mindful that Bitcoin represents competition. Money is a market that they don't like competition in. So unless the governments change or if some ideas change within that, Bitcoin could just be snuffed out of existence with a quick stroke of a pen or other means. So be careful that Bitcoin is on the concept that Bitcoin is something that just is going to be regulated away or managed by the government, but allowed to exist under the umbrella of the government. Remember, the Fed will manage the money supply, or will manage, and so will the Treasury. They're not going to like it as being a private entity. It will most likely be shifted to a centralized government. And that doesn't mean the black market won't pop up, but it just means the rules will change. That the rules that we see today will change. Here's another one talking about Bitcoin and talking about what trends, whether or not we're in a bubble in Bitcoin. This little discussion is things I pick out are things like feels and believes. They're talking about whether it feels like a bubble, whether this can continue. Those are dangerous concepts all by themselves too, because you have to play this by the book. Nothing feels. If you're using the words like feels, then you are using your emotional interpretations, and that's really no good. I mean, the evolution of the trade is specific. It's mathematically driven. It's a computer that learns behind the scenes, learns the cycles. It learns against historical database. And it tries to establish whether or not a price move is extended. And it has nothing to do with feel. It has to do with past performance and future performance, and then it gives that information to us, of which then we react to. So be careful of following people that use words like that when they interpret what's going on or trying to tell you what future price action will be. So here, one last thing before I wrap this up, let's talk about the energy build. I mean, everything looks good, everything's in triple up, but ultimately what's going to happen is these price cycles are going to get extended on the daily, but I can guarantee 100% that as the price rallies here, this energy build, WA, DI, and DI2, is going to change. You are going to see expansion participation, you're going to see falling DI, and DI2 is going to fall. Eventually it'll fall far enough of which then a blocking dome will form, and I'm going to show you that in a minute as we pull up the specific charts here for the energy build. A blocking dome will form, which is a red dome. What's going to have to happen is this DI2 in the rally here, say we continue to go up, this is going to fall down to the lower threshold. A lower threshold here generates what I call a bearish energy build or a blocking dome inside of a rally. And at that point in time, anyone who bought the reset, and probably after substantial profits and maybe after some cycle extension, is probably going to start to consider selling down or paring down their extra risky positions. So that's how the evolution of the trade adapts within the trend. It has nothing to do with feel. It has to do with cycles. It has to do with price and time cycles. It has to do with energy. And it's really a strict discipline of which the computer drives it, and the individual responds to it. One last thing before I end this here is, and we're going to look at the Pro Index. This is a little bit troubling within Bitcoin itself. This is updated on a daily basis. Bitcoin is breaking out, But the Pro Index, which is here, and the Public Index here, this is smart money, dumb money. What you want is you want the Pro Index to confirm the rally, and it doesn't have to be to higher highs. It has to just to do with direction. But during this whole breakout higher, the Pro Index has been generating new lows, which means the pros are selling this. So while Elon Musk and perhaps Tim Cook is going to be the next in line, and who knows? I mean, the CEOs are all going to jump on board, but they're not the invisible hand. The invisible hand tends to have certain buy and sell characteristics. Now, energy is far more important than the Pro Index, but the Pro Index is a tip-off of how energy builds are going to show up in the future. Professionals are selling each time that we're moving higher. It's a eyebrow raising event that says they call this a bearish divergence. Higher highs, lower lows here creates a bearish divergence, and it warns us that the smart money isn't playing along. And the smart money includes the invisible hand in general. The rallies that we see from here to here, they all have a Pro Index that follow along. And when the Pro Index stops following along, makes a slightly lower, starts to break down. This high here wasn't confirmed by the Pro Index. It marked the onset of a large correction. Now this can resolve itself, and this can start to trend higher at some point here, and I'm looking for that now. As we jump the creek above this high, this thing needs to turn up. If it fails to do that, that's a significant warning. So that's something that subscribers should be watching going forward, in addition to the energy build that we see here. It's not all price action. It's not all price action in the daily. It's energy. It's professional participation. It's cycles of price and time. So these are things that the evolution of the trade focuses on. We're going to talk about them more as this goes on, but I want to open these concepts out as price breaks out, as it gets really easy. I can guarantee the rally in Bitcoin is going to get easy from a standpoint of people are just going to get complacent about it, which means they're going to let their guard down and they're going to stop thinking, which is going to mean they're going to be vulnerable. And ultimately, the majority turns into the bag holders of an inflection point that's coming because they're not prepared, because they lack the trading discipline necessary to think independently. So that's the setup for Bitcoin within the evolution of the trade, which is our trading discipline, and I would follow it very closely. We will talk about it more, but really that's the extent, and I pretty much want to end the review on this point right here. So thanks for watching the video. If you have any questions, contact me directly through the blog. I'll leave the links below the video. If you want to subscribe to this the YouTube channel, please do so. I can put some videos up there. They usually go through the blog, but I can go through the YouTube channel as well. If not, I want to thank you for watching the video, and best of luck in Bitcoin, and I hope this opens your eyes to really how trading discipline should be influencing your decision-making process. Have a good day.